This past week, I had three conversations with prospective money management clients from three very different backgrounds, and they all had the exact same concern, or one of their main concerns was the same. And I want to talk about that concern because I think other people are having that concern. And the concern is really this divergence between kind of bad economic news, or just call it news, or just call it data, or just call it what's going on, and what's actually happening in the stock market. There's such a divergence between what is happening with the stock market and the news and the information that's coming out, real information that's coming out about the market and the economy. And I want to talk about that divergence between those two things this week with you for the market situation report. And every once in a while, I bring out this picture. I love it. And then we told them the Fed would bail them out. I just love that. We all think it works, or it wants to work while it is working, right? We look tall, beautiful, handsome, pretty when the market is going up, and everyone looks smart and intelligent. But what happens when the market finds its true value? So a lot of negative economic data coming out, and you don't need to read all of the stuff on the screen here. I'll quickly read it. First quarter GDP comes in at 2.5% versus expectations of 3%. Corporate revenue growth is flat, only 36% of companies beating revenue estimates, and 44% of them were missing it. U.S.-based stock funds reported a $7 billion weekly outflow in funds. March durable goods fell by 5.7%. It was expected that they'd only fall by 2.9%. Core capital expenditures rose by 0.2. It was expected that they'd rise by 0.3, so that fell short. Only 59% of companies have beaten their earnings per share. U.S. existing home sales came in at negative 0.6%. It was expected that it would be a positive 0.4%. Index of consumer sentiment declined to 76.4 from 78.6, not good. Chinese flash PMI came in at 50.5. Expectations were 51.5. German flash PMI came in at 48.8, down from 50.6. French PMI comes in at a horrible 44.4. Spanish unemployment in the first quarter rises over 27%. Civilian participation rate in the U.S. continues to fall. These were just a few that I pulled. There's certainly more. This is negative economic data, and this is what people are feeling out there and seeing out there. I did not even talk about inflation in here, wage deflation. But then what you have on the other side of this conversation is Bernanke and Cururo, and they are printing $170 billion a month. Now, that's a lot of money. And that $170 billion is going into, yes, it's actually going into the stock market, the bond market, and mortgage-backed securities. And when Kurudo in Japan prints money, the Japanese see what's happening to their Japanese bonds and their currency. So they're getting out of it, and they're buying U.S. bonds. So that's even bringing more money into U.S. bonds, which is driving up the price and bringing down the yield. This is what negative economic news is up against. And this is my experience of why people are upset, or they can't understand why this is happening. But what all this negative economic news is up against is what you're looking at right here on the price chart, and that is money printing. This is the adjusted monetary base for the Federal Reserve. That's impressive. You can throw a lot of negative news, or you can cover up a lot of negative news by printing that much money and having $1 trillion a year in deficit spending, and have Japan print $1 trillion a year, and have Europe drop their rates to 0.5%, which is the lowest they've ever been. That can cover up a lot of pain. And, what we have here is a teeter-totter. On the left side, we have economic data, which I'm calling it negative economic data. And on the right side, you have basically Bernanke and Kuruda printing money. And as long as they continue to do that, they're going to levitate, or they're going to cover up all negative economic data, and the markets are going to continue to go up. And that's what's happening right now. And I kind of think of this as the Lance Armstrong market. There's Lance in the front. I have his little logo, the S&P 500 logo on his shirt. And there's all the other indices around the world, all the other global indices trying to catch up to the US. And what this looks like is this screen right here. Look at the screen here. The blue line is the S&P 500 from September of 2011. And the red line is the global index, all the other indices in the world minus the US. Notice the difference between the two. The US pumping money is pushing up the US stock market. And Japan printing money is having people move money into the US stock market, and Europeans who are probably scared about their own stock markets are buying more US shares. So this is all being pushed up, not because people want it to or people want to be in the stock market, but because they feel they have to. And look at that difference. The S&P since September of 2011 is up 40%. The global index is up 18%. That's more than twice as much. This is what happens when you pump enough drugs into a market or a bicyclist. You're going to get pretty good returns until it all crashes. And that's actually what happened to Lance. He was on top of the world until it finally came out in a way that it was indisputable that he in fact was doping the entire time. And the market is doping now, but we call it money printing. These are and can be scary times because what has made sense in the past is no longer making sense in the future. And that's one of the reasons why I love the 4 strategies that we use, because the strategies don't take sides. And as one strategy may be going through repair and building up a base and having people come in at lower prices, you have other strategies, literally the market probability and the obvious trend strategy. They're rocking to the upside and they're taking advantage of this. And that's why you often hear me say, diversify into strategies, not stocks, not sectors. It's the strategies that you own that will define your outcome, define your future, define your retirement. So the next strategy gathering is coming up on May 14th. I've brought it earlier to 6 p.m. and I'm going to continue to bring it earlier into the day because these are going to be online and streamed over the internet. Thanks everyone for being here. I'm excited to see you at the next strategy gathering. Of course, we'll go over the markets, speed investing, live extensive Q&A. I'll update all the strategies for you, and we'll go over any interesting things on Market X-Ray. You guys have a great weekend, and I'll speak to you soon.